The top three things in global macro. Number one, I'm going to focus on the yen versus the dollar, that is. Number two, I'm going to focus on all of Europe. And then number three, I'm going to hit on the S&P 500 and some levels. But first, if you go to what happened to the yen overnight, you had this dude named Mr. Hamada. Mr. Hamada decided to say that the Japanese may need more cowbell. More cowbell meaning more easing, meaning more burning yens, meaning more yen down. Yen down equals Nikkei up 1.4% to up 14.7% for the year to date, and that's how it works. So again, while I did say that the Fed will be getting easier, and the dollar was down almost 2% last week, the US dollar index being, it was actually down 2.2% to be specific, you end up getting the other part of the currency war, which you cannot ignore. You cannot just navel gaze and say, well, this is what the Fed's going to do. You have to pay attention to what Draghi's going to do and what Mr. Hamada is going to tell Mr. Abe and Mr. Kuroda in Japan to do. So again, get the correlations right, and you tend to get macro versus those currency correlations right. Now, Europe loves down euro. So you also got, on the heels of yen weakness and dollar strength, you got more euro weakness. So again, the euro's trading, number one, in a bearish, what we call a bearish trend with a lot of resistance overhead. And number two, within a very tight risk range now of 105 to 108. So it banged the top end of the risk range last week with the dollar down on the week, and the euro was up 1.9% on the week, and then it faded. So again, down to 106 in really fairly short order, and the European stock markets have gone up in fairly short order. So again, we signaled buy in real-time alerts in Germany terms, and again, looking at the EWG, which is the ETF for Germany, or if you just want to buy DAX futures or whatever you want to buy, the point is that we still like Germany on pullbacks. And again, the German data this morning, which includes the German ZEW index, ZEW, using my Canadian accent, that was a 70 handle, which was a pretty good number, so that keeps people in play on the bullish side of the European equity march. And the European equity march isn't just Germany being up 23% for the year to date. Again, Germany's up 23, the USA on the S&P 500 is up 2, the Dow's kind of like flat. But in Denmark, in case you're long Denmark up 2% this morning when I got up this morning. It's up less than that now, up over 36% for 2015. Just fantastic performance in both European equities and in European bonds, and we would stay with both of those calls. Even though people keep saying that German bond yields can't go lower, guess what? They just went lower. Final point that I'd make is on the S&P 500. So just to give you some levels, why not go to the all-time highs? Why not do it? You know, it has nothing to do with what is right or what you think the Fed should or should not do. It has to do with what is going to be doing in markets. So again, don't focus on your ideologies. Again, I don't agree with the Fed doing what they've been doing for so long. I don't agree with them devaluing the dollar. But the reality is that I am tasked with playing the game that's in front of me. So again, you task yourself with that. The S&P 500 certainly on an immediate term trade basis, and again, looking at the correlation versus the dollar in the S&P 500, likes down dollar ahead of the Fed. And again, if you get that, you're going to basically get an S&P 500 retesting its all-time closing high of 2117. So 2117, yes. Russell 2000, are we still bullish on that? Yes. Am I bullish on it for any other reason than we've just been bullish on it because we thought that U.S. domestic exposure was better than international currency exposure? Yes. Am I in it forever? No. Do I change my mind? Yes. Do I go both ways? Yes. Am I still smiling? Yes. I just got back from vacay. Why wouldn't I be smiling? And of course, being long this market this week has been a very good thing. So again, the immediate term upside in the S&P 500 to the all-time closing highs, in as much as the Russell 2000, don't forget the all-time closing high was 1275, which was actually established late last week, and then you had a 2% correction that you should have bought, not sold. A lot of hedge funds sold those lows. And just to roll into the remaining part of my commentary, I'll just give you some kind of color on that. So those are my top three things.